Why, hello everyone. This is going to be one of the first videos published on YouTube about 2023 federal tax withholding rates. The publication 15. Who's excited about the IRS releasing documents? I am. I'm excited because they're final. And so the rates are set here, the publication 15 and the publication 15T that explain how to do this are done. And here on December 17th, 2022, I am already done. And I've already programmed it into the payroll and Google Sheets application. So all those that are starting to wait for payroll files from me for the new year, I can start to get going on converting this thing into Microsoft Excel for you if you want one of those copies. But if you just want to use this and access to Google Sheets, file's only $100, and it's going to have everything. And I'm really excited because we were on our road to being ready and getting this all done for the year. So how do we do this? What is going on? Let me explain federal withholding to you. So there are some things that you're going to need, and I've laid it out in the file for you. And this is a nice overview of what federal tax, withholding tax, and Social Security and Medicare and everything that goes in to paying your federal taxes as a small business, and how to withhold from your employees' pay. This is going to explain how all that works. So it starts off with a W-4. You have your employee fill out a W-4. They pick a filing status. They pick, if they have dependents, they're going to multiply all their kids under 17 by $2,000 and any other dependents by 500 to come up with an amount. You know, if it was one of them here and one of the other ones, it'd be $2,500. They have to fill out this W-4. Okay, this is a new W-4 though. New W-4 is meaning a W-4 from 2020 or later. There is a very frustrating and annoying problem when it comes to calculating withholding tax, and that is that for some reason the IRS and Congress did not want to agitate employers so much by insisting on making all of their employees fill out a new W-4. So the first question that we have in my payroll file is, do you have one of these legacy employees that refuses to fill out a new W-4 and has had an old one? Okay. So the answer is, are they using a 2020 W-4 or later? Are they using this new one, or are they using one from like 2015? And if they have been using one from a long time ago, then it's a different question that they have to answer because it's so much easier. This is the other reason why the IRS has not made this mandatory that you have everyone filling out. They just didn't want to, like, everybody and their mother was going to be pissed off. They're like, I got to fill out a new tax withholding before. I've been working for your company for 10 years and I got to fill out a new form now. That's why they don't make you do it. So the question is, well, how many allowances were on your old W-4? That's what this question is. If you don't fill out a new one, I am not a fan of this method, and neither is the IRS. The IRS wants you to fill out a new one because they want to get your withholding as accurate as possible. And the newer formulas are better for doing that. So I would recommend, as a small business, having your employee fill out a new W-4. It's a good idea because it's newer and it's better, and just don't complain. Just do it. So if you fill out a new W-4, there are questions you still have to answer. Are you married or not? That comes into a couple. That's actually not on the W-4. That's a separate question I have here because it's helpful for other states' programming. Sometimes you need to know that. That's not your filing status. Your filing status is over here. That's these questions that are going to be important questions from your W-4. They're here in purple. And the big ones are, what's your filing status? Right? Single, married, filing separately, or married, filing jointly. See which one of these is it? That's a big question. Do you have any other income might be in there? What are those deductions or separate deductions? That's a different question on the W-4. Those aren't used as much, but they can be. The other question is, did the person check the box to see? Like, what? Yeah, there's a box to check if they have more than one job, this box. And it totally changes their rate, whether or not they click it or not. So that is a question that you have to answer. Was this box checked or not? That's really important. And I have the default is no, because it will withhold the higher amount if the default is no. So, and it's usually no, unless person's working more than one job. Then step 3, they enter their dependents right here. This is what you need for the W-4. And the reason why you need that is because to calculate federal withholding, which are these formulas right here. So all the formulas I have in the file to do everything, you need to have that information that was just answered about the new W-4. So let's talk about how what all this programming is and why this works and how this works. And this is about the quickest way to do it to make sure you have all scenarios covered. So you have to follow the guidance from here. They tell you what to do in order. They're like, enter the wages, enter the number of pay periods for the year, multiply this by this. I did it all. We're not going to go through every single line of instructions, but I am going to give you a brief overview. And that's what these titles are for here. So what's going on is you're annualizing the wages for the employee first. Then you have to have an adjusted annual depending on which W-4 they filled out. That's what this formula does for the newer W-4. This is for a 2020 or later. Then you've got standard deduction amounts, which, by the way, did not change. They are $4,300 and $8,600, $12,900. The standard deduction amounts did not change for this year. That's the only thing that didn't go up. But the inflation adjusted progressive thresholds went up, and I'll explain that's better for all of us employees out there, because we're going to have a little bit more take-home pay in our paycheck this year because of the inflation-adjusted thresholds, and I'll explain what those are. So anyway, you have to put the standard deduction amount in here, which is right. Then you have to adjust the wages for the old W-4 because you're doing two things. The person could have filled out an old W-4 from 2015 or whatever, or a new W-4. There's two different wage bases you need to calculate. Then you start putting the rates in, and that's this stuff. Okay, that's this stuff right here. These are the rates, and I've programmed these formulas into a cell in Google Sheets. That's what this is. So it's right here. You can take a look at it, or you can purchase a copy and get access to this and run it yourself. It's progressively putting the amount of the wage base into whatever pocket it is with a nested if formula is what's doing here. We won't get too technical with the programming, but it's a nested if formula, and it's just literally that. It is this. All of these, all 6 of these different tables. This is a table, this is a table over here, this one, this is a table, this is a table based on whether or not they did or did not check the box and which W-4 they used. But because you answered all the questions in here originally on that employee info sheet, you're done. You are done, and it figures out what it is for you. That's what happens. That's what happens. So basically it's done. It's working. And I'm going to spend some time testing it. But there's not very many places to test it yet because I'm one of the first people in the country that's programmed their payroll software to work for 2023. I can tell you that because you have to go through the new release before you can certify anything. So that's what this is saying is $3,555 of wages for this employee in a weekly pay period would result in $614 in tax. So what's the effective rate of that? 17%. So it puts them into a pocket. If this person was making this per week, then over a year, they're making $184,000. That does not seem right. This is weekly, right? Or is it bi-weekly? No, it's weekly. Let's double check. Does this make sense? It doesn't make sense. $184,000 a year. Does that put you into a 17% tax bracket? Doesn't seem right. Let's see what the annualized wages are doing in here. No, that's right. Well, let's look at the formula here in the publication 15T. So that person was single, and they are making right here. So their effective rate is 24% there, but the lead up to that means their effective rate is only 17% because the first 50,000 are only taxed at 12. No, this is probably correct. I say probably correct. No, it is probably accurate. So basically what you're learning a lesson is about the progressive income tax structure. Whenever anyone says that, oh, we're only taxing the rich, we're taxing the rich too much, tell them to shut up. And the reason why is because we're all taxed at the same amount, no matter how rich we are, on the same amount of increasing money. So like when I just did this formula here, for example, and I was trying to figure out what the effective tax rate is of the federal tax rate to see if it makes sense, because I just typed this in like 10 minutes ago. So it's kind of like I'm learning as we go if we did this correctly, even though I think we probably did because I've been doing this for years. But this is what I want to talk about. So this amount of federal tax withheld is 17% of what the gross wage is. Well, I'm like, it seems kind of low. I thought the tax rate for that level is higher. And it is. The tax rate for that level is 24%. Then why isn't this number 24%? And that's because there was a lead up to this wage base, meaning the first $100,000 were not taxed at 24%. They were taxed at a mixture of 22% or 12% or 10%. The first 5,250 was free. The first 16,000 or the next the next $11,000 were taxed at 10%. See this? The difference here is $11,000 between 5,000 and 16,000. That's taxed at 10%. The next 33,500 are taxed at 12%. The next 50,000-ish are taxed at 22%. That's why your effective rate is less than 24% here. And I think that is right. So we're one of the first to do it for 2023 because it is only December 17th. We of course will continue to update all of this as I continue to do nothing but payroll work basically for the next few weeks. But I'm really happy to see the publication 15 and 15T out. I've also read the full publication 15 and double check wages. Social Security wage base did go up to 160,200. So the first 160,200 of wages are subject to Social Security. Medicare has no limit, but Social Security is now maxed out at that federally. So that is the other change that I noticed, but we are basically done. Purchase a copy of this if you want to run small business for yourself and have under 20 employees, basically. If you have more than that, you need my Excel version, which is more expensive and more powerful and does some different things. But this covers all 50 states, and now the federal rates are done, and I'm super excited. So that's federal withholding for 2023. Expect a little bit more take-home pay because these numbers, they went up fairly significantly, more than I'm used to seeing. Like this married filing jointly number used to be at like 12,800 or something like that. It's now 14,000. So like these things essentially are raising those limits on which the lower tax rates apply. And that's why you see more take-home pay in your paycheck. Like last year, this amount would have probably resulted in like $650, $70 or $75 worth of tax that would have been federal withheld because the rates are going, the thresholds are going up. These rates stay the same. It's still 0, 10, 12, 22, 24. That was the same as last year, but the thresholds went up. So more of the money gets taxed at an effective lower rate, more nominal money. That's why if you're getting the same paycheck from year to year, you'll see a little bit more take-home pay because this would have been like $650 or something back in 2022. All right, there you go. Federal withholding, payroll in Excel, payroll in Google Sheets. It is much, much closer to ready than it was yesterday. So if you're interested, follow the links in the description. Payroll should be easy, and we are making it so.